Hey all, welcome to ShareTreck. This is the Sunday edition. Slightly late because I went to bed very late last night celebrating the 500 subscribers. Thank you all. And today I just want to talk to you about something that has been concerning me for a while. My theory has always been that the next 2 quarters are going to be some kind of consolidation increasing at increasing levels as risks get mitigated with a rally on the fourth quarter. So I need to modify that thought process a little bit, and I'm going to explain to you why today, because there's a curveball. I have been investigating the Russia-Ukraine issue and how it is impacting all of us. And I've uncovered some more information as I dig deeper. I'm going to share that with you, and I would like your opinion on what you think it's going to do to the stock market and more so the genomic stocks. With that said, let's get started. So here is how I look at the current situation after the digging that I have done on this issue. It seems to me that wheat and sunflower oil is going to be the first point of impact for most of the economies. And after that, it's going to be fertilizer, because that's for the next year's crop. There's going to be a shortage of fertilizer. There will also be price inflation on the fertilizer. And therefore, many countries which can produce crops but cannot afford fertilizers are going to see a drop in their output, and that's also going to impact the food situation the following year. So the crops next year will likely be the final domino which can actually cause food shortage. So we have to make a distinction between inflation of food prices and food shortage. So if there's a inflation in wheat prices, what it means is that you're paying more but you can still get wheat. When I say food shortage, what it means is that even if you're willing to pay, you're not going to get it because there isn't enough to go around. So I'm going to unravel this scenario step by step as we go ahead, talk about various countries, how much they import, how much they export, and so on. And we'll go through that and we'll form some conclusions in the end. So how does wheat flow from the producer to the supplier? Of course, it has to go through ships and some mode of transit. And when it comes to wheat, Russia is the biggest exporter, and Ukraine is also among the top 5. So these two countries are locked in a battle, and it's going to be difficult to export from both of these countries. Therefore, we are looking at total wheat exports worth $7.3 billion in case of Russia and $4.7 billion in case of Ukraine being impacted by the war in Russia and Ukraine. On the other side, if you look at who are the wheat importers, you are looking at Egypt being the one of the biggest importers out there, importing almost $5.2 billion worth of wheat, and they are facing an internal inflation rate of 13.10%, which is really a high level of inflation. So you can imagine how much of political pressures are going to be building up within Egypt for the government to do something to make sure people get wheat. Egypt uses a lot of wheat-based food. Next in line is China. They import $3.74 billion worth of wheat, but their internal inflation is just 2.1%. So they won't get too much impacted by this. But Turkey is going to take a big blow because it's at 36.10% inflation while it's importing $2.44 billion worth of wheat based on previous year's prices. These are all previous year's prices. Right now with inflation, it is going to be much, much higher with the shortage and the inflation and the supply chain issues. Next in line is Nigeria with $2.15 billion worth of import as of the previous year, and they have an internal inflation rate of 16.82%. So again, more political pressure in all these countries for the leaders to solve an unsolvable problem which is not in their control. None of these countries created this problem, and none of them are going to be able to solve the problem. After that comes Indonesia at $2.08 billion, and they have an internal inflation rate of 3.55%. However, Indonesian rupiah is one of the weaker currencies, as we'll see when I talk about it in the subsequent slide. So that creates a big problem for Indonesia. Italy is next with 1.89 billion worth of wheat imports, and they have a 6.9% inflation at home. The rest of the countries do not have such a big footprint except for Japan. Japan is another notable country with $1.41 billion worth of import, and they have 2.5% internal inflation. So Japan is also not going to feel that much. It would be able to tide over. But Bangladesh is likely to fare worse because they buy 1.28 billion worth and they have an internal inflation rate of 6.29. So there's going to be a lot of political pressure within the country on the politicians to sort these issues. So we'll have to see how those things will play out. India also does export wheat. You see at the very bottom of the table, it's exporting $1.7 billion worth of wheat. India recently declared that they're going to stop all exports of wheat. And later on, I saw a video of External Affairs Minister of India. He was talking about the situation, answering a press question. So the reporter asked him, "Why are you blocking exports of wheat from India during this time of crisis?" So the External Affairs Minister clarified that India has not banned wheat exports. What India had done was, when they found that there's a global shortage, they allowed wheat to be exported. But according to the External Affairs Ministers, there were dealers in Singapore and Dubai who just bought a lot of wheat from India, and they were putting a markup and then selling to other countries and also holding a little bit of those of the wheat. Therefore, they decided to cancel all of those things. But when any country is in need and they approach India, India is willing to provide them with wheat. So that's what the External Affairs Minister said. So that's a bit of a relief, because that means the Indian supply is not out. So that makes the situation slightly better. Elsewhere, I believe Canada had a little weak wheat harvest. So that's also going to impact the amount of wheat that is available in the market. But this is the status for wheat. And when it comes to sunflower oil, which is the next item that we are talk about, both Ukraine and Russia are the biggest exporters. Ukraine exporting $4.71 billion worth and Russia exporting $1.83 billion worth. And to look at the significance of these two countries, look at the nearest competitor, Netherlands. They export only $0.531 billion worth, but they're also importing 0.618. So they do some kind of processing and value addition, it seems. So if you leave Netherlands, then you have Bulgaria. Bulgaria is at $0.369 billion at third place. So you can see the difference between Ukraine and Russia. They're at a different level altogether in terms of the volume of their export. And when that export is taken off this year, it's going to cause food inflation. Next year, if the war continues and they're not able to put the crops in place and they're not able to get the sunflower seeds and extract the oil and all those fancy things, and if their ports continue to be blocked and Russian ships continue to have problem with insurance, and likewise for Ukraine, then we are going to have a sunflower oil shortage next year. Now, that is going to impact the countries who are importing. And if you look at the right side table, you have India importing $1.9 billion worth of sunflower oil, and they have an internal inflation rate of 7.79. So definitely there is going to be pressure on the politicians there. However, in the Indian cuisine, it's possible to substitute sunflower oil with some other oil. India was thinking about importing palm oil, but something happened in that end. So there are other ways of handling that as far as the Indian cuisine is concerned. So most likely they will shift from sunflower oil to something else which is less expensive. We have China as the next with the $1.53 billion worth of import, and they have an internal inflation rate of just 2.10%. They are not going to have much of a problem out here. Netherlands seems to be doing some fancy thing like importing, adding value and exporting, something like that. So I would ignore Netherlands in this table. Turkey is another country which is going to have big problems because they are in hyperinflation with 36.10% inflation. And the prices I'm showing you here are from last year, and they had imported $0.569 billion worth of sunflower oil. So if they're able to switch to some other oil that is easily available for them, they can avoid this problem. But the 36.10% hyperinflation is going to be a big concern for Turkey. Then we have Italy with $0.484 billion worth of import of sunflower oil. They have internal inflation rate of 6.9%. So they are going to have some amount of trouble out there. It is to be seen whether they can shift to vegetable oil or something else. So there is a possibility of substitution, unlike the case of wheat. We don't know how it's going to play out. Spain, Germany, Iraq, Belgium, Saudi Arabia, they form the remaining. That's the situation with sunflower oil. Again, this year it's going to be inflation. Next year it's going to be shortage, in my opinion. Now, if we were to proceed further and look at the food inflation, as I mentioned, G7 and rich countries will face food inflation because they're going to be able to bid in the open market and buy at a higher price and use their economic might as well as political ability to give some other sops in lieu of getting wheat and sunflower oil. But that's not the case with lesser developed countries. So while the G7 and rich countries will face food inflation, lesser developed countries and emerging markets are going to find it extremely difficult competing in the open market. So even though if they may be able to snag some of the supplies, it's going to be coming at a much higher prices, and their own internal inflation rate is going to get exacerbated, and the political pressures are going to be extremely high this year. The critical economies such as Sri Lanka, Turkey, and Pakistan are going to have a whole lot of problems, and they will definitely need support from UN or world organizations or IMF or something like that, depending on their individual situation, to tide over this year. This year is going to be step one, as I categorize it, in the unfolding. We're also going to have a fertilizer shortage. Russia is a major exporter of fertilizer and accounts for almost 12% of total exports as of 2020. And Brazil is the largest importer, followed by India and USA as of 2020. Now I'm going to show you the data source and we're going to go through various countries and we'll see what is their current situation to get a qualitative feel of the shortage. Let's look at this data set out here. It's coming from OEC, and I can put a link in the bottom for OEC World. You can go and see this, explore this original data sets for yourself. I'm just going to go through some of these countries here. Russia, if I take the cursor on it, it shows that Russia has an export of $7.6 billion and it accounts for 12.1% of the total exports of fertilizer. And then you have Belarus with 4.73% of total exports, valued at $2.96 billion. The other big exporter is Canada at 8.77%. So this is going to give a good boost to Canada's economy because we got potash mines in Saskatchewan, and potash is going to command a premium out there. And then you also have United States exporting 5.88% of the world's fertilizer requirement, valued at $3.68 billion. And after that you have China. China figures in both imports as well as exports, so something funky happening out there. We'll find out later on. The next bigger one is Morocco, which is exporting 5.92% of the whole world exports of fertilizer. So if we were to look at this chart, then Russia is one of the biggest countries that's going to be impacted, and that is going to take away $7.6 billion worth of supply, or 12.1% of total supply of exported fertilizer as of 2020. So right now, if you look at the countries that are importing, India is one of the biggest, Brazil is one of the biggest importers with 12.5% of the total imports. And that directly maps with what Russia is exporting. And the value of their imports are $7.8 billion as of 2020 prices. And the next biggest importer is India. Now, since I have an Indian background, I can confidently talk about this. The new government, which is there in India, has been working on making the country self-sufficient. So they have come up with what is called as liquid nano urea. And that liquid nano urea is a bottle that costs somewhere around 300 rupees or something. And one bottle is equivalent to a bag full of urea. So they've already put up a plant. But for the matter, I think India is going to be able to handle this slightly better because they got their internal production. And earlier, India used to import those fertilizers, and it used to cost Indian government 5,500 rupees for a bag of fertilizer to be given to the farmer. And the farmer used to pay 300 rupees for that bag. So there was heavy subsidy burden on the government. With nano urea coming in, with a small bottle of nano urea being equivalent to one bag of fertilizer, the government is going to not only avoid having to put subsidies in place, but also transport logistics is going to be much easier because it's going to be less heavy and easy to dispense. And the government is putting up multiple plants across the country. Many of them will get operational in a couple of years. The first one is already operational. It is done by, I think, IIFC, Indian Farmers Fertilizer Cooperative. So India is going to handle it that way. I don't have insight into how China plans to handle, but as I said, China has got something funky going on. They are exporting 11.2% and importing 4.18%. So I don't know what it's about. Brazil is is going to have a reckoning out there, and United States I think can manage because US will be able to source the fertilizers, and they would be able to take care of that. Canada again has got an import of 2.23%, but I think it can be substituted with potash, in which case potash exports will go down, and that can reduce the amount of fertilizer available for export from Canada. So that said, this is what the map looks like. Now in this, if you look at Ukraine imports 1.38% of world fertilizer. And if Russia is going to take away 12.1% out of it, and if Canada is going to take away a little bit because of its own import requirements not being met, then that's going to significantly shrink this pool. And when you have big players like China and United States and Mexico trying to corner the market, you're going to have a situation, and Germany, example, Poland and all, you're going to have a situation where Ukraine, which is again facing so much of adversity due to the war and due to a lack of exports of its own and destruction of a lot of value within Ukraine, it's going to find it very, very difficult. And even if they manage to get it, whether they are going to be able to clear all the debris from the fields and make sure that they're able to put a crop, all those things are a big question mark. So that's going to feed into next year's crops. So that's what I would like to say about the fertilizer shortage issue. So here is the website for IFFCO, IFCO Nano Urea Liquid. It says here, IFCO Nano Urea is the only nano fertilizer approved by the Government of India and included in the Fertilizer Control Order. It is developed and patented by IFFCO. Application of one bottle of nano urea can effectively replace at least one bag of urea. It has been tested on more than 90 crops across 1,000 locations in collaboration with ICAR, KVK Research Institute, state agricultural universities, and progressive farmers of India. When sprayed on leaves, nano urea easily enters through stomata and other openings and is assimilated by the plant cells. It is easily distributed through the phloem from source to sink inside the plant as per its need. Unutilized nitrogen is stored in the plant vacuole and is slowly released for proper growth and development of the plant. Well, that said, let us look at the food shortage situation that I was describing. Countries that are closed societies, like the case of North Korea, or countries that are highly indebted, like the critical economies like Sri Lanka, Turkey, Pakistan, those countries, or countries facing hyperinflation. Again, Turkey comes to mind there, Sri Lanka comes to mind, and countries which are having weaker currencies. Like you look at the top 10 weakest currencies in the world, Venezuelan Bolivar, Iranian Rial, Vietnamese Dong, Indonesian Rupiah, Sierra Leone currency. Those countries and all are going to have significant problems this year getting food. In the next 3 months, it's going to unfold. And next year, what's going to happen is because of fertilizer shortage, and depending on when the Russia-Ukraine war finishes, if Russia and Ukraine both are able to resume farming, and if the labor are in place, if the farms are cleared of ammunitions, and it's ready to be put to use, then a fresh crop can come from there. And if they are able to match their previous output, at least from a supply side, there will be no problems. However, that's a big if, because we do not know how much damage is going to be there at the end of the war between Russia and Ukraine, how much of those land can be used. And the second problem is that the fertilizer, which is not being supplied right now, is going to affect the next season's crop. And if we have less crops next season from many of the producers, the export market is going to be significantly small, and the importers are going to face a really big problem. And all these countries with weakest currencies are going to have a very big issue even affording to pay. And that's where the G7 countries and the more advanced countries are going to be able to flex their political and economic and geopolitical muscle to corner the market and provide for their own citizens, of course, at a much higher prices. But these countries in the weakest currencies section are definitely going to have problems, and the critical economy like Sri Lanka, Turkey, and Pakistan are all the more going to be in a much severe crunch. And there is the prospect of empty shelves in many countries, and also among the also in advanced markets. You will find that lesser grocery chains might have more empty shelves as compared to the much bigger grocery chains which have got established supply chain and higher volume of purchase, which may be able to attract better prices and a better quantity of supplies when it comes to wheat, sunflower oil, and other commodities. So that's what it's looking like to me going forward. So in my mind, this raises a lot of questions, because earlier I was saying that the next 2 quarters are going to be bouncing along the bottom, consolidating progressively to higher and higher levels as risk starts getting unraveled. I still hold by that. And then I feel that in the Q4, we are going to have a pickup in the market. I still feel that way because our focus is more on the inflation, supply chain bottleneck, and shortages of commodities and everything. But when all those risks start get resolving, and when we start consolidating upward, there is a big danger that by the time we come to the fourth quarter and we are ready for things to move up, the whole world will be singularly focused on fertilizer shortage and shortage of the next crop being inadequate to supply the need for everybody in the world. So if that happens, what is going to be the impact on the stock market? How is NASDAQ going to work? And how is genomic stocks going to perform in that kind of an environment? Will there be a demand for genomic stocks that are more into creating crops that are drought resistant, that need less fertilizers? Is that section of genomics going to pick up steam immediately, and may that be the front runner for higher returns on investment? Is health going to take a back seat, and all those genomic companies which are working on human therapies going to find that it's difficult to get more funding, and then they are going to be in a difficult situation continuing with their research. So those fallouts are not yet clear. I'm going to keep on investigating. I would like you guys to give me your thoughts. What do you think it is? Am I all doom and gloom, or things are going to be much better? Please put your comments below, and let's have a discussion. And another update for you, since we have crossed 500, I've approached YouTube and requested them to activate a community tab. So what will happen is when community tab comes in, you can communicate with each other and have discussions around topics like this. And I'll also be able to moderate and understand and bring it into my subsequent videos and answer some questions and some train of thought that is expressed in the community. With that said, I want to thank you guys, all of you, for helping me reach this milestone as a first-time content creator. And all of us have done very well to reach this stage. Now our next target is 1,000 subscribers, and we'll reach there by coming up with quality videos, more in-depth analysis. And also I'm going to be very responsive to each of your requests. So if you want to look at any particular company, or if you are looking at any particular problem and you want to have more analysis on that, please put it in the comments below. I have a short list of items that I want to make videos on. I'll add it into that, and sooner rather than later, I'll have a video out for you. With that said, if you like this video, please press a like out there, and that will help YouTube algorithm to send this across to other people to discover our channel. And if you have not subscribed so far, please subscribe and become a member of our channel for everything related to CRISPR and the stock market. Thanks and have a great day. Bye for now.